Treasure Coast Connector, connecting residents and businesses of the Treasure Coast. And here's your host, Ellen Contreras.
Well, welcome everybody to the first ever episode of Treasure Coast Connector. I'm your host, Ellen Contreras of the Pharus Group, which is one of our sponsors. So if you want to learn more about them, you can visit them at www.pharusgroup.com, which is spelled P-H-A-R-U-S group.com, or you can call them at 772-223-3344. And this show is all about connecting the business owners to the community so that we can learn all about them, what makes them unique, and what makes their products and services so special, putting a spotlight on them. And today we're going to be talking about commercial real estate. So for business owners that are thinking about buying or investors that are thinking about owning and diversifying their portfolio, we're going to learn more about that today with our very special guest, Brian Hartman, who is the founder of Pharus Funding and partner of Pharus Group. So welcome, Brian, to the show. Thank you so much for being here.
My pleasure. Thank you for having me.
Yes. So I want to just dive right in. You are a financing veteran, and you've been a banking executive for many years, and you have helped businesses structure deals, secure loans to help them in their business.
Correct.
So what made you at this point want to venture out onto your own and open up your own business?
It was actually a long time coming, but over the years and more than I like to admit years, we've done a lot of different deals for businesses and for investors, but unfortunately, there were a lot of them that we weren't able to do for those business owners and investors. Mm-hmm. And it became a little bit difficult having to watch those people walk out the door without being able to help them.
Yeah.
So we learned to try to find ways to be able to refer them and, be able to help them get something done. Mm-hmm. But in a lot of cases, that doesn't happen. And when they walk out the door, there's a lot of times when they don't know where to turn. So it became evident that we had to try to create more awareness of what else is available, what alternatives are out there. Yeah. When sometimes the lenders or the banks might say no, that there are other options available for them. And it was difficult to have business owners that through the years, I guarantee, ended up going out of business because they weren't aware of all the alternatives that are out there. So about a year ago, I decided that it was time to do something a little bit different, try to seek out more flexible, creative options, financing options for the business owners and the investors. Mm-hmm. And we decided to form a company called Pharus Funding Partners. Chris Morehart, who's the owner of Pharus Group, and myself started that just over a year ago. And now we have probably well over 200 lenders that we work with across the country.
Nice. Very nice. So you're able to really help people a lot more than you ever were before.
Absolutely. There's a lot, many more options available and different things to be able to help them with.
Mm-hmm. Well, that's an excellent why. So many people don't understand why somebody gets into the business that they are. So that was a really great one. And so now I want to talk about the business owners. Okay. So there are business owners that I know that are renting and they feel that, maybe I should, own my own property. For some people, renting makes the most sense. And for others, purchasing a property is the better way to go for them, for their legacy, for their business. So how do people figure out, should they continue renting or it's now the time to buy?
Well, the business owners, I think, have to look at the last couple of years' trend of where their business is going. Mm-hmm. Be able to determine, are they growing out of the space that they have? What is their time frame? What are they looking to do? Is there expansion opportunities that are coming? And then decide if it is the right time. And in order to do that, there's a couple of things. One is they want to make sure that they have enough money for a down payment for a mortgage. Mm-hmm. they want to be able to take a look and do a comparison side by side of rent versus own.
Okay.
And what they're looking for there is, obviously they know what their rent, what, their any type of insurance and all of that they need, what that amount is, because they've been doing it. But side by side to that, they want to figure out what is the mortgage payment going to be, principal and interest.
Yeah.
But they also have to take into account what are the taxes and insurance going to be. Sometimes there's common area maintenance, just like in an association for people's homes.
Yep.
That's monthly in addition to. So they call it PITI. And that will give a business owner what their new amount is going to be after the down payment on the mortgage. And then they can compare it to the rent and make sure that it's still in line. And in a lot of cases, it turns out to be less than what they were paying before in rent. So obviously
that's a sweet
big factor.
surprise.
Correct. Sometimes it turns out to be more, and then you realize if your business is going to expand into it, that's okay.
Okay.
But if you think your business is going to be staying right along line where it was over the past couple of years, you may not be able to build into it, so it might not make the most sense.
Okay.
On top of that, you also want to look at depreciation, because you are able to get potential write-offs for owning your own building as well. So, but that would be more ideal for a tax advisor.
Okay.
To be able to answer those questions.
Yeah, we'll get to the whole CPA side of things in just a moment. But how often, I guess people do pick your brain a lot about, hey, can I afford this? Do you help them with that assessment?
Absolutely. So after they sit down and make that determination if it's the right time, I can help them with the side-by-side comparison. But also what happens after that is, more importantly, finding out what can you get approved for.
Ah, yes.
And a lot of business owners make the mistake of going to look for the building first before they know what they can actually buy and afford to buy.
Yeah.
That's where we come into play, because I'm happy to sit down with any business owner, do that side by side, but also find out what can they get approved up to.
Very good.
And then they can go out and start to do the search for properties.
So shopping. I'll just say shopping. That's a wonderful way of saying it. That's terrific. Okay, so if the business owner now decides you've helped them and now they want to be an owner, what are they going to do to prepare? Like it's definitely very overwhelming. I know you touched on some of that, but is there anything else that they need to really be aware of? Absolutely.
So fortunately, being able to be creative and having different lenders, there's different qualifications depending on what the circumstances are. So things we're going to look for up front is cash flow of the business.
Okay.
Showing the ability of repayment. We need to look at the most recent P&L, maybe a couple of years of tax returns, both personal and business.
Okay.
And then from there, find out what their credit score is. Sometimes that does have an effect, sometimes it doesn't. And then we want to look at the collateral. What is the property that they're looking to purchase? How much will they need to put down? And all of that's going to be figured out based on, can they show the ability of repayment in the business? If they can't, there's alternatives for that. If their credit score is 700 or it's less, there's different options available for that as well. And then the collateral really is a big part of it. So the property that they're looking to buy, what type of property is it? Where is it located? Is it in a metro area or a rural area? And based on that, we can make a good determination of what type of loan they can look for and what they can get approved up to. Okay, well, very good. And so I wanted to just circle back to, the whole tax issue. Can they actually get tax incentives or breaks over a certain amount of time, or does it have to be handled, very quickly in the early part of the purchase? Well, that's a good question. Depreciation can be handled a few different ways. There's something called cost segregation studies if the property is big enough, where cost segregation companies can actually go out and determine what parts of the building can possibly be depreciated over 5 years and what parts would go full out 39 years. Okay. So it can actually be a big tax advantage to have that done. They might be able to accelerate how much taxes they can write off up front in the first couple of years.
Very cool. Very interesting. Well, thank you very much. We are going to now take a very quick break, a commercial break, but we have a lot more to discuss with Brian when we come back. Please stay tuned to the Treasure Coast Connector.
Are you talking about having your own radio or TV program? Then you should talk to Planet Vero. Here's why we're the best. Your show will be heard on 3 local iHeartMedia stations, plus worldwide on the iHeartMedia network. And you can choose our live stream option, which gives you 6 cameras and professional television studio quality production that's delivered to many social media platforms. Call us for a free, no obligation on-air interview, and we'll show you the power of Planet Vero, radio, and TV. That's 772-778-2832. Follow the powerful Rush Limbaugh Show on Planet Vero Radio. Take advantage of the amazing opportunities on social media like Facebook and YouTube with a live stream broadcast. Call 772-778-2832. It's the future of marketing. It's Planet Vero, and it's brought to you by Idea Garden Advertising. Visit planetvero.com.
Hi, I'm Derek Ogden from Word of Mouth Computers and Electronics. Since 2009, my team and I have been providing South Florida and the Treasure Coast with the highest level of service in the technology field. Computers, networks, surveillance systems, web services, Wi-Fi systems, anything you need technology related, we're your guys. Small business technology and consulting is my passion. Whether your business has 1 computer or 100 computers, I will come to your office and give you a custom technology evaluation report, and you won't owe me a dime for it. That's right, a free, in-office technology consult, but only for a limited time. For your home or business, all you need is one number for all your technology needs. Call me right now before time runs out at 888-966-7228. Remember, there's no obligation. That number again is 888-966-7228. And ask for me, Derek.
A member of the iTex trading community. Your iTex dollars are welcome.
The Treasure Coast Connector. I'm your host, Ellen Contreras, and I am with Brian Hartman of Pharus Funding and Pharus Group. And so now we're going to start talking about investors and what they are thinking about when it comes to real estate investment and adding it to their portfolio, another egg in their basket, so to speak. So Brian, we all know that the real estate market is cyclical. There's ups and downs. There's great times to buy. There's times where you want to sell. You want to hold on to what you have. What is it like right now in the commercial real estate market of the Treasure Coast, and what types of properties are hot or not right now?
It's an interesting time because everybody remembers the year 2008.
Yes, we would like to forget that.
Absolutely. But what people don't realize is 2008 was really the beginning of the recession. Mm-hmm. That's not where it ended. Yeah. So it kind of dropped and continued to drop, unfortunately, until around 2010. Mm-hmm. 2011 is when it started to come back again.
Come back up a little.
And usually the cycles run in 10 years. Mm-hmm. So we're quickly getting to that point.
No, we can just between you and me.
Absolutely.
Okay.
Well, you got to put the disclaimer out there.
Yeah, I know.
But it's still hot right now. Mm-hmm. What a lot of investors are looking for now are the, I hate to say it, but recession-proof properties. Mm-hmm.
Okay.
So a lot of them will look for multifamily. Mm-hmm. A lot of them will look for what's the next step. So multifamily is really the next step if, God forbid, there's foreclosures.
Okay, yeah.
People will have to move into an apartment complex.
Mm-hmm. Okay.
Some people won't be able to afford an apartment complex, mm-hmm. so investors are also looking for nice mobile home parks.
Really?
And then in addition to that, people will have to store some of their stuff because they might be downsizing at that point. So self-storage is a very hot item right now.
Building them all over the place.
Everywhere. So the capitalization rate is really what a lot of investors go by. That's the return on investments. How long is it going to take for the investment to pay itself back? Okay. Basically. Mm-hmm. The higher the capitalization rate, the better the deal for the investor. Mm-hmm. It's a little bit more risky with higher capitalization rates, but their return is better and they get their investment back faster.
Okay.
So higher cap rates is what the investors look for. In today's market, multifamily apartment complexes, very low cap rates. When the rates are lower, cap rates are lower, the prices are higher.
Okay.
So you're not going to get your return on your investment as fast as if you have a higher cap rate. In this market, multifamily is very, very popular, high in demand. So the prices are very high, which means your return is going to be lower. Today's market, you're looking at 4 and 5 caps on multifamily. Whereas if you look at mobile home parks, and everybody has the stereotype of mobile home parks that they're kind of like land with just boxes that you can scrape off.
No, not at all. Some of them look like regular housing developments. I know that from personal experience from friends. They're beautiful.
Absolutely.
Yeah.
Now, what happens with the mobile home parks, they're still giving a better rate of return, a higher rate of return. So a lot of the investors are turning towards looking at mobile home parks more than multifamily because of that. Self-storage facilities, like you said, they're building them all over the place. Their demand for it is through the roof. What we're also seeing now is a need for light industrial. A lot of the contractors don't have a place to rent. There's no vacancies in kind of like they call it the flex space category. Office, warehouse kind of locations. So we're starting to see an increase in that type of construction to accommodate the demand for it.
Yeah, I was going to say there's a lot of new build for that.
Absolutely.
But they also have to focus on refurbishing the existing market, the existing properties, because when the new properties are built, they can command a higher price.
Correct.
But then the owners of the older properties then are kind of forced to keep up a little bit, right?
Which keeps the neighborhoods nicer looking.
Yeah. Okay.
Yep.
All right. So very cool. And passive income, everybody is talking about that. They want to generate multiple revenue streams. A lot of people are attracted to passive income. And I get that because we're very, very busy. So if we can set something up that allows money to come in where we're not actively having to manage things, that's wonderful. But when it comes to commercial real estate, I think that the investors that are listening to this go, well, properties need to be maintained. And I personally don't know how to do that, they're thinking. So if they really want real estate to be passive as far as an income generator, what are their options for upkeep of property?
The easiest way to explain that is, especially for the multifamily complexes and the mobile home parks, there's property management companies that are available to be able to manage and maintain the property for the business owner. The business owners should be, or the investors should be very careful with that, because there are some good property management companies and some not so good property management companies. A lot of times you'll hear that property owners are firing their management company because they're just not doing the job well. I would recommend interviewing 2 or 3 at least, depending on where the property is located. And you want to find a property management company that specializes in the type of property that you're buying. Some of them focus on office buildings. Some of them focus on multifamily. Some of them focus on mobile home parks. Some of them do all 3, you know. But you want to make sure that you're looking into the one that is actually taking care of other properties like the one you're buying.
Very good.
And also what you want to find out when you're doing your due diligence and learning how the property is running, is the management company and management expense already included in the expenses of the property?
That is what I was going to ask you, because as an investor, you have a margin. You want to make sure that this is profitable for you and returning and yielding the kind of results that you're looking for.
Correct.
So how do they make sure that they're not eating into their profits, the whole point of being an investor to begin with?
You want to make sure when you're doing, they call it due diligence, when you're getting your profit and loss and balance sheets on the property, rent rolls on the property. You want to see what type of vacancies there are, but on the P&L, you'll see a line item, or should see a line item for property management. And what you want to do at that point too is find out has the current owner been paying the right amount for the property management? Sometimes,
okay.
sometimes they lower that amount on the P&L to make their bottom line look a little bit better.
Okay.
Sometimes they're just not paying the property management company enough money and they're not doing the job well. So there's a lot of things that go into it, but you want to make sure that you investigate that. When you have the right property management company involved, that's when the passive income comes in.
Right.
Because that's less legwork that you have to do when you can trust that property management company and know that they're running the property the way that it should be.
You know, something else that I just learned recently about property management companies is that they want you to sign a contract for 1 year. So at least 1 year. So is that something to be wary of? And what happens if they don't deliver on what they're supposed to do? Is there an out clause to get out of that contract?
Usually you have the ability to really negotiate with the property management company. And you also want to, you know, on a monthly basis or quarterly basis, get together with that property management company to make sure that they're doing what they're supposed to be. Typically, there's an out clause if they're not doing what they're supposed to be doing. So you want to check those line items and probably would want to develop a checklist for yourself to be able to make sure that they're on par of what they're supposed to be doing.
Okay, very good. Because, you know, we don't want people who are on the cusp of investing in this to, you know, think, oh, I shouldn't have probably gotten involved in that. So depending on how well you set yourself up, this could actually be an excellent addition to your investment portfolio. Absolutely.
And sometimes you could even have an employee from the property management company live on site.
Okay.
So I remember growing up back in Brooklyn in an apartment building there was always a superintendent on site. So that's the property management company. So if anything was wrong in the building, there was somebody there or a crew there to be able to take care of it. But the super always managed that company.
Yes.
And so if you have somebody living on the property, it really maintains it a lot better.
Okay, well, very good. So our final question is for the business owners and investors. What can they expect from their CPAs in terms of guidance?
I think the CPA should be looked upon as their first responder. That's their initial advisor to make sure that they typically should know how the business is doing, what the business or investors' intentions are for the next 3 to 5 years, and know if it makes the most sense for them to be able to look to buy instead of rent, or if it's an investment property, you know, it doesn't meet their financial needs of where they're headed in the future.
Okay. All right. So we are just about wrapping up the show. So what I wanted to do was say thank you so much. The very first episode, you made this very easy for me. I appreciate it very much. Brian Hartman of Pharus Funding and Pharus Group. Before we go, tell everybody how they can get in touch with you if they have questions about buying or investing.
Absolutely. Thank you again for having me. Best way to reach me is office number is 772-223-3344, or they can email me at brian@pharusfunding.com. That's PHARUS funding.com.
And Brian, BRIAN,
Correct.
Just to make sure about that.
Correct. Thank
Very
you.
good. And thank you so much for joining us at Treasure Coast Connector. I am your host, Ellen Contreras. And thank you to one of my sponsors, Pharus Group. If you want to get in touch with them, 772-223-3344, or the website, www.pharusgroup.com, PHARUS group.com. Again, I'm your host, Ellen Contreras. It was a pleasure to have this show. I look forward to seeing everybody again next week and on a weekly basis. So everybody have a productive and wonderful week. Thank you for joining us.